to Market Watchers Scott Martin, Paul Schatz on this. Market's barely budging one way or the other. Scott, what do you make of that?
Well, Neil, it's probably just the calm before maybe the storm, and I think the storm is the upside, frankly. I think we're going to see Dow 25K here by the end of the year. Maybe not by Christmas, as I originally predicted, but I do think in the next few days. And I think the real key, too, Neil, as you talked about with some of the previous guests today, is what happens with those trillions of dollars that are parked overseas. What exactly do companies do with that money they bring back stateside? Is it hiring? Maybe. But it's definitely stock buybacks, it's definitely dividends, and maybe even mergers and acquisitions, which is not being talked about very much. That's all stuff that is going to benefit your 401k. That's all stuff you should be excited about if you're an investor in the S&P 500.
The flip side of that, Paul, to Scott's point, though, is it's not necessarily beneficial to those whose companies are acquired, right? They lose jobs. And I'm wondering what's going to happen there. I mean, of course, I'm working at a company, of course, that has a big stake in Disney. And as a result, a good number of people are going to lose their jobs.
Well, that's right. And the disappointing part will be, Scott's right, M&A hasn't been discussed. And that while it would be great for stocks on the stock market, if this tax bill was really passed to help the middle class and the average person, and CEOs are not going to put the money to work, they're not going to hire, they're not going to build new plants, they're not going to invest in technology and CapEx, that'll be disappointing. While I'm ecstatic we passed something, I'm just disappointed that we didn't go far enough. Special interests got way too involved in this and then muddy the waters. So, yeah, people are going to see a tax cut, but it could have been a whole lot better. I think the markets are responding appropriately. I think there's more upside left. But listen, we've had such a great run this quarter. It wouldn't be unusual to see a little pause to digest, even 1 or 2%, which you haven't seen in months.
Yeah, I almost would welcome a pause, wouldn't you, Scott? Or no, this is unabated, and you are in the camp of Morgan Stanley's, I think Goldman and some of these others, Bank of America, that over the weeks have talked about another 5 to 10. I think in Morgan Stanley's case, 20 or more % run up in the market as a result of the new multiples as a result of the tax cuts. What do you think?
Yeah, I mean, Neil, I'd love to see, and I'm sure Paul would too, the market go up every day, but that's not realistic. And it's good for the market to pause and pull back, and as a term on Wall Street goes, backfill with respect to different sector and different allocations that happen on the day-to-day market movements. But I'll tell you one thing. Let me throw some math at you. It looks like next year the S&P 500 is going to create about $150 of earnings. And in an economy that's growing, say, 3 to 4%, with the tax cuts behind us now, you're going to see about a 20 multiple or so on those numbers. And so if you take those numbers on the $150 of earnings, you're going to be looking at about an S&P at 3,000. So I believe those predictions are very right on. And I think that's definitely in the cards, considering the growth a lot of these companies have ahead of them.